to the debriefing for practice round 2. So for this video, I'm going to go through the result from this practice round and also pointing out things your team need to pay attention. So before we start, please know that this is just a practice round. The competition round will start on February 3rd, and that's the actual grade will start to score your competitions. So basically, your practice round grade will reset to 0 before the competition round start. So that's a good thing, right? You get to practice and you get to know the capsim and get to learn how to make decisions. All right, so first, I want to point out when I look at the financial statistics, what I'm going to point out is that look at the teams Andrew, Baldwin, Ferris, Garrett, and Hopper. Your team's ROS, ROA, and ROE are negative. So that is a warning sign for you because ROS means what? Return on sales, ROA return on asset, and ROE return on equity. So those are the indicators of how profitable a company is related to the total sales, total asset, and total equity. So a lower or even negative ratios suggest that the company did not use the assets, sales, or equity effectively to generate income. So those the teams who get negative ratios need to really pay attention. Okay, so I also want to point out the profit looks like only the team Chester, Digby, and Ari are making profit, and then for the rest of the team, you really need to take a look of many areas and make good projections so that to make profit. So SG&A to sales ratio looks like many of the team did a good job, but some of the team really need to improve. So SG&A to sales ratio is the selling, general, and administrative expenses. So those are the costs of running a business. So they include rent, utility, marketing expenditure, and employees benefit. So generally speaking, the lower SG&A to sales ratio, the better. So you need to check if your team really having a high or low ratio. So contribution margin is the incremental money that generated for each product sold after deducting the variable portion of the firm's cost. So basically, the higher contribution margin ratio, the money is available to cover the business overhead expenses or fixed cost. So if your contribution margin is lower than 30%, then you need to check into your marketing, production, or pricing. Did you really put a good price there? Did you put too much or too little price, right? Now, let's take a look at the emergency loan. If your team runs into emergency loan, that means what? Your team is bankrupt. So it's basically not bankrupt. It's basically means what? Your team's run out of cash and you have the negative cash, right? Or to cover your business. So that's why the emergency loan kicks in. The system automatically kicks in the emergency loan to keep your business running. So if you have emergency loan, then make sure that you check these three categories. One is inventory, right? Did you have excessive inventory? If you do, then you should know that if your product run into the emergency loan, then you have to pay for um, the the warehouse to store your excessive inventory. That costs money, right? You cannot sell the product. So about 70% of the teams for goes into emergency loan falls into this category, or you trying to improve the major to fund the major plant improvement, but you forgot to do that, then about 25% of emergency loan goes there. So lastly, if your profit were so negative that you exceed your cash reserves, then you goes into emergency loan. That means you don't have enough cash to cover. Okay, so do not worried about emergency loan too much for the practice run. But however, you may run into the same problem when you goes into competition round. Then you need to try your best to get out the emergency loan. So there are a couple things you can do. So check the inventory status for each product. If there is excessive inventory, then try to determine why. So is it because the sales forecast is too high, or is it because having a poor product, or unfunded capacity and automation purchase? So sometimes company make a big investment in plant, but forgot to raise the money. So what means is that you try to improve your plan, then you need to probably borrow more long-term debt or current debt to cover that. So you can also check the cash flow from investing activities or the plant improvement. Okay, so make sure you check those areas. Next, we come to the market share. Looks like Team Digby is taking a huge chunk of the pie in this game so far, right? They have the 17%. And also the three teams are making profit: Team Chester, Digby, and Avery. Making profit is very important. It's also one of the criteria to grade your capsim. So for other teams, make sure in the future round you can make profit by making a good projection. Okay, so we have the stock and bond. So if your team goes into emergency loan, most likely your stock will be 1. Or if you have a negative cash net income, your stock will goes into 1. But once you get out of emergency loan, you start making profit, it will go up. Okay. Okay, so here just one little note. We see Team Andrew issued dividend here. Team Andrew and also Team Ferris. So just one note. If your company is not making profit, it's not profitable, then I would recommend not to issue the dividend at this early round, but because it will influence what your cash statement. Later on, I'm going to cash flow statement. I'm going to point out that when I analyze that. So make sure your team making profit before you really pay the dividend to the stakeholder. It will keep them happy. You pay dividend. However, if you drag your company into the water, just by paying the dividend, it's not really worth it, right? So just a warning. If you are making profit, you can do that. That's good. Okay, so we come to the financial and summary. So a couple things I want to point out. First is net income. As I mentioned, if you have negative net income, that's really huge problem. Okay, that's huge problem. You need to check all the other areas how to improve that. And depreciation. If you invest in the capacity, capacity, plant, equipment, it's depreciate each round, right? You need to take this into consideration when you're making decisions. Do you really want to purchase this much of equipment to produce the product? Then you need to think about the depreciation. Okay, and also we have the inventory. You can see like the negative number is extra cost that you have to pay to store the excessive inventory. Okay, now as I mentioned before, dividend paid, right? Some of the team pay the dividend, even probably not profitable yet. It will influence your cash flow. That means $6 billion is out, right? $2 billion out. Those are the cashes you are giving out. So it's really huge influence for your financial statement here. Okay, we can also see, okay, in the balance sheets, you have the long-term debt and current debt. I would suggest teams to take the long-term debt sometimes, because usually long-term debt is lower interest than current debt, then you will pay less interest. However, in some circumstance, it happens that the current debt is the interest rate is higher than long-term debt, so you need to check out which is lower interest, then you pay less interest. Lower interest rate, then you pay less interest, right? That's better. And then we also come here, the income statement. You can see how much interest you are paying in each round, and the taxes you're paying, whether you are profit or not. It's again, it shows in the financial statistic. Okay, so those three basic statement, cash flow statement, balance sheet, and income statement are the three basic accounting statement you need to know to read as a manager in the future, right? So understanding it, you should be able to know if your firm is healthy or what other things you need to improve. Okay, now we come to the production and the capacity. So it looks like only the Team Hopper is the capacity. The production is a little bit less than the capacity. Then you did not fully utilize the capacity that you invest. That's not really a good sign, because it will go to waste, right? The capacity you invest will go to waste. Okay. Then you may also see other teams, the production is more than a capacity. That's most likely because they are running a second shift to increase the production. However, here you need to know, what you need to know is adding the second shift will cost more, because the second shift cost 50% higher than the first shift. Okay, now we come to this plant information. So this is my favorite page, right? Because if you what other teams doing, you can see in the detailed summary, even like their revision day, age, and everything. You will have all your competitors' information here. So I usually will come here and check what are my competitors are doing. So here I want to point out a couple things. One is second shift, as I mentioned, it will cost higher. And also the automation. So automation is ranging from 1 to 10. You should know that the increasing each level, it costs a lot, right? So automation is a very, very expensive. So make sure you go to the user's guide and check out how much it costs to increase the automation. So for the low end and traditional, I would recommend higher automation if you can, because you have to make a lot of a quantity to sell to make more profit. But for the high end performance and size, you can have a relatively lower automation, because it's really you're not producing that much as traditional and the low end, right? Then we also see the plant utilization. Um, so high plant utilization is good because you are utilizing your plant. Ideally, if you hit 140 to 180 is good. However, you have to make sure the 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 extra utilization you add there, right? The extra percentage you add in there, the product you produce, you can sell all. Otherwise, do not go that route. Okay, it will make your team go into emergency loan because everything will go into the inventory. It's really bad if you cannot sell your product. Now we can see the revision date. Some of the looks like most of the team have the product this round. However, I can see Team Hopper this heft, this product, and also a hamper is 2024. So if your revision date is not within the year, you cannot really sell in this round. It will sell in next round. So that can happen, right? If your revision date is not within the planning year. So what you can do is to decrease the performance and increase the size until you get the revision date that within the planning year that you want to. So this is one of the some of your team may bump into the same question that the revision date is not within the year. Now we can see some of the team really stuck out, like Team Chester sold most of the product. Is it necessarily good or bad? I would say half, because good is that you don't have to pay a lot of inventory fee, right? Inventory for excessive inventory to store the extra money there. But bad side is that if you cannot sell, if you don't have enough product to sell, then other team may take advantage from your the market share from you. So they will sell their, then since you run out of the product, then they can sell their product, right? So good projection is important here. Okay, so this is about the plant information. So I would usually come here and then check other teams, what they are doing, even the detailed information here, right? So this is good. Now I'm going to just use a traditional segment analysis here to demonstrate how you analyze for each segment. Then you can use the same methods for other segments too. So first, what you need to take a look is the total market size. It's this much, and then the demand growth rate increased 9% each year. So what you need to do is to use this number times 1.92, then you come up with next round, for the 2024, then the whole market can sell how much, right? And then you use, for example, the product days, then how many percent did you sell in this market. You can find in the later pages there. It tells you how much percent you sell in this market, then times the total number you come with for 2024, then you can find the projections or projected sales for next year. However, that's under the circumstance that you have really good customer satisfaction, customer awareness, and customer accessibility. Okay, so here I'm going to teach you how to read the customer buying criteria. So age is 47% of importance. That means what? It's very important for this group of customers. Age and price adding up together is about 70%, right? So if you hit these two, then you can really, customer will really like your product, and then you hit the other two, then you can make the best sale. Then that means you're basically on the ideal spot here. then customer will buy more, right? So on and so forth for other segments too. For example, low-end customers, they 11% increase, and also price and age, the importance is close to 77%, right? You can see that. High end, right? 43% of the positioning, and age. Why? Because those people, you think about like Apple or those high tech companies, right? People just constantly want new product, constantly want to have a better quality of the product. So that's why the position and age are very important for this group of customers, right? So now I'm going to the perception map and show you. You can see that this is the high, I would say it's high end maybe. Okay, so each market segment, you can see if you hit that ideal spot, you can sell more. However, if you are not in the ideal spot, just run that, your sales may be influenced. So find the ideal spot is very important for each round. Also, the perception map, each segment moving from left corner to right corner, because customers always want to have high quality and low price product. So that's why each year is moving towards the right corner here. So lastly, what I want to point out is the human resource. This module here. So human resource will be added in round 2, and TQM will be added in round 4. So you need to see the turnover rate. The team hopper is 12. Then you can see that did you really invest in your employees as a manager? Did you give training? Did you give compensation? Did you invest in the recruitment to reduce the turnover rate, and also making your employee happy, and also then they'll be more productive, right? So this is you can also see what other teams did for those decisions. Does it effective? So those are the areas you need to take a look. Okay, so this is the debriefing for the industry 4.